But moving on, let's talk what's happening on the tariff front. A brewing trade conflict between the United States and Europe is raising fresh concerns for global markets. The European Union is struggling to finalize a key trade deal with Washington, just as the US threatens to sharply raise tariffs on European cars. At the center of this dispute is a transatlantic trade agreement struck in 2025, which had reduced tariffs on EU cars to 15%. But now, US President Donald Trump is warning of a rollback, raising tariffs to 25%, accusing the EU of not fully implementing the deal. That's a significant jump and could hit one of Europe's biggest export sectors, its automobile industry. The agreement, reached about 9 months ago, is still not fully ratified within the EU. EU lawmakers are demanding stronger safeguards, including the ability to suspend the deal if the US violates terms, and even a proposed deadline of March 2028 for key provisions. But EU governments are divided on these conditions, slowing down final approval. The stakes are huge. The EU and US together account for nearly $2 trillion in annual trade, making this one of the world's most critical economic relationships. A tariff hike to 25% could significantly damage European car exports, with Germany expected to be among the hardest hit due to its reliance on US markets. Markets are already reacting. Shares of major European automakers have fallen following the tariff threat. This dispute is also spilling into broader global trade talks. At the recent G7 trade ministers meeting in Paris, tensions between the US and EU over tariffs overshadowed discussions on supply chains and critical minerals. Meanwhile, EU is racing to strike trade deals with other partners to offset any potential losses from the US market.